Sehr geehrte Damen und Herren, ich möchte Sie recht herzlich begrüßen von der Rohstoff Investment Conference 2014 hier aus Vancouver. Wie immer sind wir auf der Suche nach interessanten Gesprächspartnern und heute haben wir Brent Cook bei uns. Hi Brent, it's nice to meet you and that you can join us to do a little interview. And you are the you're the writer from the Exploration Insights as well.
That's right.
That's right. And you are a keynote speaker here at the conference. So can you do me a favor, please tell me a bit about what you write and what you speak about here on the conference?
Yeah, I will. It's great to meet you guys finally over here in Canada. I'm actually U.S. based. I read an investment letter called Exploration Insights. That's the website URL as well. The letter is about what I'm doing with my money in this sector, mostly the junior side of it, what I'm buying, selling, why, what my expectations are, and that sort of thing. Nobody pays me to say anything, so it's just basically what I think and what I see.
Okay.
I've got 30-odd years of an economic geologist and a mining analyst, so I've got a lot to back up what I'm doing and seeing. So I'm very conservative in what I buy in my letter. We try and keep it to about 20 stocks or less. I think that's plenty to follow, and that's really all you need if they work.
Mm-hmm. And the past year we saw a dramatic downtrend in the mining sector, especially among the juniors. So how do you see that? Do they have a chance to come back in 2014, or maybe does it take much longer?
Well, that's sort of what I'm talking about in my keynote today.
Okay.
And what's really important, I think, is to understand why the mining sector and juniors have done so poorly over the past 2 years at least. I mean,
Yes.
the GDXJ is off 75%. And the reasons behind that are one, the major companies have completely disappointed. And, you all know why that's happened, is that the CapEx has gone up,
Yes.
costs have gone up, and they haven't made near as much money as investors would have expected, given the rise in the metal prices. On the junior side of things, I think it's really important to recognize, for investors in this sector to recognize, is that as the Earth has evolved over, 4.5 billion years, it changes. And those changes create anomalies, or different changes in the rock type. And those changes in the rock type, be it an alteration, or the introduction of a bit of arsenic or gold or whatever into the rock,
Yes.
or a geophysical anomaly, whatever, that's just part of how the Earth evolves. And what happens with the exploration geologists, and what happens here in Vancouver, is people raise money to go and test these anomalies.
Mm-hmm.
And if you recognize that there are literally millions of them scattered around the world, and on average, 1 in 1,000 might become an economic deposit.
Yes.
It's really critical to recognize that these anomalies are ubiquitous to the Earth, and as investors in this sector, we need to identify what a company's looking for, what it looks like, what it's going to be worth, what's it going to cost to mine it, what's the CapEx going to be, what's the infrastructure, as quickly as possible. And as soon as what your expectations aren't being met, we're looking for the fatal flaw, you sell. So you can actually make money on those on the way up if you get out in time. But more importantly, if you pick a right one, you can ride that quite a ways, because a true discovery is a very unique event.
Okay. So what companies would have the better chance? Is it these companies with the low grade or with the high grade? And because you have to look at the cost to get it out of the ground,
Precisely. I think,
especially at that price, at what we have right now with silver and gold.
Yeah, no, for sure. I think it's more important. This is what I look at. It's not about grade. It's about margin.
Okay.
I can point to True Gold, who's got a deposit that in Burkina Faso that averages, I think it's like 0.9 grams a ton, 0.8, 0.9. That makes good money because it's so simple to get the gold out. I can point to another company with 30 grams a ton, the old Hollister deposit, and they went broke because they couldn't make money on 30 grams. So it really comes down to margin and not grade.
So why couldn't I get that gold out? It depends on the kind of rock. If you have 30 grams per ton in the rock, that means for me that it's easy to get out.
Yeah, it's not.
That's okay.
For instance, Hollister was in these little skinny veins about yay wide that jumped around quite a bit, and when they mined it, the rock fell in with it. So your 30 grams is all of a sudden diluted down to 10 grams, and then you've got to go through the process of crushing it and grinding it and leaching it. All those things add to the cost. So it costs more to mine and process and produce the gold than it did to actually, than you sold it for. Whereas like true golds, it's really simple. They just rip it up, blast it, put it on a heap, leach it. Simple.
Easy going.
Yeah, so that's why 0.9s can make a lot more money than 30 grams.
Okay, and then it's too much waste rocks between that.
Exactly.
That makes it expensive.
Yeah, and sometimes the gold is actually caught up in the metal, in a pyrite or arsenopyrite.
Yeah.
And to get the gold out of that takes a huge amount of energy.
Okay.
And that adds to the cost as well. Whereas again, with these oxidized deposits, Lydian's got another one, Orzone's got another one like that. Mother Nature has turned the iron to rust, liberated the gold, so all that's been done for you. That's why those work so much. Those work.
So how could these companies get back the trust from the investors that they spend the money again in such properties and such companies? Especially at that hard time what we had the last 2 years. It's not that easy, I think.
It's not going to be easy. I don't expect this year to be a great year. I know a lot of people are saying we reached bottom that, but my anticipation is that we're going to be bouncing along the bottom. We're being dragged along the bottom.
Okay.
But what's really important, and this is what the gist of my talk is going to be this afternoon, is that the mining companies that are actually producing, they've cut back on exploration, they've cut back on development, they're high-grading their deposits, meaning they're pulling out the best of it, which is sterilizing the rest of it. Next year, they're going to come to realize that, hey, we don't have good deposits.
Yeah.
So all we've got to do this year is identify the 10 or 20 companies that have either really solid deposits or are run by competent exploration teams with the cash to survive, and just accumulate those. And I think that's my plan anyway. I think that's where to go. This year's the year to accumulate, with expectations that 2016 and 15, this realization is going to come to the rest of the investment community.
Okay, that means also that the companies which have a high all-in cost are heavy. It's not easy to stay alive over this year, because where do you see the silver or the gold price? Do you think we go again down under 1,000, or maybe we stay in the range from between 2,000 and 12 or 1,300?
I don't know.
Yeah,
that's the honest answer. But I don't see an immediate catalyst to take gold or silver prices higher. I mean, when I do my spreadsheets and mine models and that for my research, I try and go between, say, I use about 1,250 or 1,300 as a base price and just see what works. But what's more important is if you can find the deposit that's going to be able to produce gold or copper or silver in the lowest quartile, you're going to make money. Those are the ones that are going to work regardless of the price. So I think it's more important to identify the solid deposits, at least for me, instead of worrying about where the gold price is going to be, because that's a coin flip to me.
Okay, so that means we should take this year 2014 to do some stock picking to find the right stocks, and maybe you have some favorite stocks what you can mention, and if there are some favorite stocks, do you have them also in your depot? You bought them?
Yeah, that's a good point. Again, my newsletter is about what I'm buying with my money. So if I talk about a stock, it's because I own it.
Okay.
And it's important. Nobody pays me to say anything. A lot of people might pay me to say nothing.
Okay.
But these stocks are I own. I own a company called True Gold, which has a oxide deposit in Burkina Faso that's going to be real low cost to build and process. I like that. I own a company called Midas Gold, which has a large deposit in central Idaho. The net present value calculation on that thing based on their preliminary economic assessment is about $1 billion after tax, and you can buy the stock for $100 million. There's a timeline here. It's going to take a while to permit it, but I think it's a solid deposit, and there's some room for improvement there as well. I like to invest in what's called prospect generators as well, which are these companies that are run by smart technical people who generate ideas and then bring in outside money to explore these concepts. One I like a lot is Lara Exploration. They're active in Brazil, Colombia, and Peru with a number of joint ventures. I think that's a smart way to go. And then there's a bunch more in my portfolio, but those are the ones that come to mind right now.
You mentioned Colombia. One more question about that, and I have been in Colombia before as well, and in Colombia you have also these high-grade veins, bigger vein systems, and also these low-grade systems, but do you think it's will become a company will go in production there with low-grade open pit? There's no open pit mine right now in Colombia as far as I know.
Yeah, I was actually just in Colombia in December looking at some projects, both low-grade and high-grade, and early stage explorations. It's certainly a prospective country geologically. It's going to be very difficult to permit some of the large open pit mines that or deposits that are there, particularly Anglos. But there are, the one project I had to go look at, a company called Cordoba, which just picked up a project, porphyry type. It's in a better location. It's 15 kilometers from a large open pit coal mine and a large open pit nickel mine. So it's all about location there. So you want to be in the right place in Colombia. And I think, the narrow high grade veins, that'll be much easier to permit. And I think that's probably the better way to go on the whole in Colombia, unless you're, well located in terms of permitting.
Okay. That means for 2014 we have enough time to do some stock picking and get the right one, so we can make some money after that when the gold price will rise up.
That's my bet. We'll see.
Okay. Thanks a lot for taking time do that little interview, and let's keep in touch.
All right. I appreciate it. Thank you.
Thanks a lot.